While our next presenter gets his microphone on, I'm going to introduce him. Byron Dale is an author and lecturer on the monetary system and has been qualified in several courts as a monetary expert in North Dakota, Minnesota, Illinois, and Missouri. He is the author of the Minnesota Transportation Act, MTA, which would mandate Minnesota's Transportation Department and state-chartered banks to enter into an agreement providing that the banks would advance funds for legislatively approved transportation projects in the same way that banks make commercial loans, simply by monetizing the projects themselves. And without going into the details of his presentations, I will just introduce to you Byron Dale.
Thank you, Bob. First thing I want to know, can everybody hear me? Okay, now the second thing I want to know, if you'll answer some questions if I ask you. Okay, the first thing I really want to do though is tonight is to thank Ellen Brown, or I wouldn't be here, and Bill Still. Bill Still drove all the way from Chicago to Minneapolis in an ice and snowstorm to interview me for his film. And I really appreciate that. He actually risked his life to do it. He stayed overnight, and we had a couple of great visits, and he took several shots of me. And of course, you see me occasionally on that film. And unlike most people up here that said they didn't have a solution, didn't know how to implement things, I think I do. Also, I think we have a great problem, and most of us will not address the real problem. The real problem is our money. And I mean that indifferent than everybody else says, because one guy said he can't understand why people don't want to think about money. The reason is because everybody thinks they know everything about money. I'm serious. I have traveled from California to New York City and from Canada clear down to Costa Rica giving speeches. That's all I used to do for a while. And everybody I knew thought they knew a lot about money. Now, I knew I didn't know anything about money when I started, so I did what I thought was the logical thing. I wrote a letter to the Treasury and asked them how the money worked. And that's what I want to show you. I didn't do a lot of research. I did that too. Actually, it was a kind of a long, drawn-out kind of a process because, and I always get emotional at this point, and forgive me, because it's a big deal in my life. And it always affects me when I get a little tired. And I get tired when I'm doing this kind of stuff and staying up all night and sleeping in strange beds. But I began really interested in this when I began to wonder how in the world we got so far in debt when everybody I knew worked for a profit. And the IRS said we got some because they wanted share of it. But yet the debt got bigger and bigger and bigger. And I was personally, I thought, fairly successful. I started out at 22 and married that really nice-looking dark-haired girl back there when she was about 19, as I recall, which is almost 50 years ago. And we started out with 640 acres of land I got from my dad for a contract for deed, and we went into the ranching business. 18 years later, we had a 5,000-acre ranch worth $1 million on paper. Now, I had learned one thing really well, was how to get into debt. I have not been out of debt at least $100,000 since I was 23. But I was having a hard time figuring out how to get out of debt. And you know, it became very obvious to me, like so many say, there's got to be something wrong here. So one day I went to a management meeting in Denver, and we run into a really good speaker, and he was telling us all about how to keep our books and manage our books and know what was good expenses and bad expenses and all this stuff. And so my wife and I figured out, we decided how to do all that. We did. I didn't like the results. But then I got real interested in this. I had a son just graduated from high school. And he was out in the garage one day, out in the shop, and we were talking, and I was asking him all kinds of questions about this stuff. Because, I mean, after all, I thought he was a pretty smart kid, like most of our parents do. And pretty quick he looked at me and he said, "Dad, I don't have a clue what you're talking about. I don't even think I'm interested, but I can see you really are. So I'll tell you what, I'll make a deal with you. If you promise to never ask me any more questions about this, I will run this ranch for 3 months. You have 3 months to figure out what the heck you're worried about or thinking about, but you got to leave me alone." And I looked at him and I said, "Are you serious?" And he said, "Well, of course." I said, "Son, you just made yourself a deal." And I turned around and I went in the house and I started studying about money. And I admit, I didn't know anything about it. Only thing I cared about it, I'd like to have more of it. Any of you ever been in that situation? And so that's what started, and we did some of this stuff, and we studied. And then one day I was sitting there after thinking about this stuff, and I said, what would happen if I wrote to the Treasury and asked them how the money system worked? And my wife said, well, I don't know. But she said, I never learned to type till I was 49, which was much later than this. She said, but I'll sit down and type a letter for you. So we did. And I want to share that letter. I don't have it up here like I do some other charts. But I want to share the letter with you. It was written to the United States Treasury. I didn't know who to write it to. It was a 13-page, all it was 13 questions. I sent it to the Treasury, Department of Treasury. And a fellow by the name of Russell Monk, the General Counsel of the United States Treasury, wrote and answered my question, an 8-page letter. But the thing I want to deal with all was the first question I was really most concerned with: how is money created? And he wrote back and said the actual creation of money always involves the extension of credit from private commercial banks. In other words, you got to borrow it. Well, the first thing that popped in my mind, I said, well, if that's true, where do I get the money to pay the interest? So I wrote him another letter and asked him. And it says here, and this is, I'm not going to get the whole letter, but this point here is all I wanted to really get about. Another point I need you to clarify: if money is only created by extension of credit and a book entry, where does the money come from to pay the interest on the money we just borrowed? And he writes back and says, the money for paying interest on borrowed money comes from the same source the other money comes from. Now, I guarantee you, I'm not the world's greatest genius, but I'm smart enough to know you can't borrow your way out of debt. And I learned, I didn't do it personally, but I was with a lot of young people when I was young that tried to drink themselves sober, and that didn't work either. Forgive me, I really don't like to do these sweep charts. I'm better at just getting up here and tell you my life story. I had a guy tell me, you're a poor speaker, but you're a really great storyteller. And that's kind of what I am. I've lived this. This has been my life. I haven't thought about anything except a few minor things about, for the last 30 years, about what is money, how does it affect our lives, where does it come from, and what do we do about it? That's all I've done. That's committed my almost life to that. Didn't get much, but I got a lot. I learned a lot. Okay, I want to go through some of the things because this is kind of interesting. Because first, I want to go to this chart just a second. Because I want you to understand, and maybe not this right, but money is power. Now, it's not money in itself that's power, but it gives people power. It gives power to do a lot of things with. And money also works on certain principles. I'll get into that more later. But if we use the good principles, we build great wealthy nations and wealthy people. If we use money under the wrong principles, we always destroy every nation it's used in. And that's historical fact. Okay, now let's go on a little bit about this letter, because he tells me here in both the Goldsmith's practice and modern banking, new money is offered by creating loans to customers. And I think I jumped ahead of myself here. Let me check here a minute. Oh, yeah, I did. Let me go back here just before I go on to here. Because first off, nobody really knows what money is. You know why that is? Because money is nothing but a mental concept. That's all it is. It's a man-made concept that we think. Many things have been used for money. We go back as far as the Roman Empire: salt and cattle and tobacco and fish and shot and shells and wampum beads and gold and silver. But you know, there's one thing all of these things had in common. They represented wealth. What is wealth? And this is the chart I got from California. I was out there speaking one time. And wealth is basically what comes from two concepts: agriculture and mining. If it can't be grown, it must be mined. And it takes three things in combination to produce anything. You first have to have the knowledge of what to do, you have the raw materials to work with, and you have to have the labor to do it. If you don't have those three things in combination at the exact same time, you cannot create anything. Now, you can do a lot of things. I can have an idea, but if I don't put the idea into that other, it never becomes anything but an idea. Okay, now, this is the real truth here. There is no subtler, surer means of overturning the existing basis of society than to balk its currency. It engages all the hidden forces of economic law on the side of destruction and does it in a manner that only a few people are able to diagnose. And I'd say like 1 in every 10 million that I personally run into. And the only way to debauch currency and to make it a corrupt and immoral thing instead of a good thing for the benefit of everybody is to change it from a representation of wealth to a representation of debt. You think about that. And to help explain that, now this comes into a few questions. How many of you have worked for a salary and got paid? Okay, when you got that paid, you considered you was paid, and that was the end of it. That was the whole big deal. You had been paid for your services, and that was the end of everything, wasn't it? Okay, how would you like it if we changed that just a little bit, and now I loaned you all your paychecks, and at the end of every year you had to pay me it all back plus interest? How much do you think that would affect your lives? That's what we have allowed them to do to us. And that's what the corruption of money really is. And I'll get into that more a little. But let's go through here a little because I got a little something I think I want to show you. Here's my tails. This is the first thing. Oh, okay, this is what I want to get into. Now, when I was back on the ranch, I had a big, beautiful brown horse. And you can see him there. This is true. The rest of it ain't so true. And, you know, I read this out of the Treasury. And I want to get the connection here. And he said, both the new Goldsmith's practice, modern banking, new money is created by offering loans to customers. A private commercial bank, which just receives extra reserves from the Fed, can make roughly $6 in loans for every $1 reserves it obtains from the Fed. You know, and I had been out riding this horse, and I just got home, and I was thinking about this, and a guy drove into my yard. He said, you know, I've been going by here, and I've seen you ride that big, beautiful horse, and I used to be able to ride a horse when I was a kid, and I just loved it. But, you know, I have a problem. I just love to ride, but I have really no place to ride. I only can ride at 10 o'clock in the morning or so, and I don't have any place to keep a horse. And, you know, I thought about that a while, and I thought about what he said, and I said, well, I'll tell you what. I'll just sell you my horse. Well, he said, well, I don't really have any money. That's okay. I'll just loan you the money, too. And so I loaned him the money, and it didn't cost me anything to loan him the money. All I did is have him sign an IOU. Why don't you think about that? And so now I sold him my horse, and man, he just thought it was great, and he come out and rode, and also I said, well, you know, now that you own the horse, you also have to pay for it. I mean, you got to pay you got to pay for all his feed because I'm not going to feed him anymore. I don't own him. And so he says, okay. And then, of course, obviously you got to pay the interest. And I charged him just as low as I could, made sure it just barely paid the interest, but none of the principal. And so then I loaned him my horse, or sold him my horse. You know, and it wasn't long, another guy come in. And he said, you know, I've been watching that big, beautiful horse, and I'd love to have one like that, but I don't have any place to keep him, and I don't really have the money to buy him, but I'd love it. And I said, you know, young man, I believe I could solve your problem. I'll just sell you that horse. And I'll just make a little deal. You got to pay the fee because you own him, and I'll loan you the money for it. So it wasn't hard to loan him the money. I just had him sign a promissory note. I did the same thing. I made sure he just got it. He paid me just enough to give me a really good, healthy feed bill, so I got ahead on that, and just enough to just barely pay the interest, and not much more. And, you know, I did that 6 times. And, man, this was really good, and I was loving it, and they was loving it. And then them guys did to me what I wouldn't believe anybody would do to a nice man like me who had treated him with the best of everything and been over backwards and hurt myself financially to help him get started riding that horse. They went to town, and you know what them guys did? They got to drink a little beer. Well, you know how it is. You get to drink a little beer, and you get to feeling good, and you get to boasting. And first thing you know, they was all betting on which one had the fastest horse. And then, by golly, you know what? I heard about this, and And they decided, by golly, they'd come out Sunday and have a horse race. It's called a run on a bank. And you know, so by golly, this made me a little nervous, by golly. I mean, I had a half a notion to take the horse and leave town because I knew he was a fast horse. He's the only one. But man, this is just too good a deal to let go. So now I got a real problem, and I'm scratching my head, and what have I got to do here to solve this problem? You know, and I got to thinking about it. And I had a legislator friend that needed a little money to campaign, and in fact, I had 2 or 3 of them, actually. You know, I was doing quite good with this because, you know, after they paid all the feed and paid all the interest, they still owed me 100% on the horse. I mean, this was a really good deal, especially if I could expand it a little bit more, you know, and doing this about 10 or 20 times, you know. Well, maybe I'd get 2 horses to do it at 20 times. And so anyway, by golly, I thought about this. And so I went and seen my legislators, and we had a little meeting, and I said, I know you guys need a little campaign money, and I've had some pretty good luck lately, so I'll tell you what I'll do. I'll really contribute heavily to your campaign if you pass a law that you can't race horses on Sunday. Can't race horses and gamble on Sunday. And that's what they've done to us. And this is exactly what they've done to us. And they've made it believe it was really good for us. They've helped us out. I mean, gosh, they've helped us have things we could only dream about before. And they increased the money supply, and increasing the money supply always increases production every time. It never hurts production. The only thing that hurts production is when they raise the interest on that money. Keep going. Like I said, I do much better if I don't have to fool around with these things. Okay, now we want to go on here because I want to read a little bit more from the Treasury. The book from the Treasury a little bit. Because Russell Monk goes on and said, you want to know whether the bank is the one getting the benefit of the new money. Since the bank owns the new money while the customer has merely borrowed the money, the bank does indeed get the benefit. And they do. Because they get almost all our profit through interest. Otherwise, we would be prosperous, wouldn't we? Because we're all working for a profit. And so then I got curious, and I wanted to know exactly what the bank loans us. Now, I know he said they loaned us by just adding numbers to the checking account. So I said, well, just exactly what it is. And so I found this book, and this is from the Federal Reserve Purposes and Function. And it's up there, and so we said, and it says in paragraph 3, page 6, all bank deposits are a form of credit. That's why I don't never like to use the word credit. You're always talking about. Basically, they represent amounts owed by banks to depositors, not the other way around. They come into existence by exchange of a bank's promise to pay customers for the very assets the banks acquire. Currency, promissory notes of businesses, consumers and other customers, mortgages on real estate and everything else, and government and other securities. So all they loan you is a promise to pay you, which they never have to pay you. Because I personally sued. You remember back before the 63s, most of you old enough to do that, when our money used to have, we'll pay to the bearer on demand X number of dollars. They don't anymore, but it did before then. And I had one of them, and I sent it down to the Treasury. Or I sent it there too, but I just responded, didn't do nothing. So I thought, well, it was on the Federal Reserve Bank of Minneapolis, and I'm pretty close there. I had about 30 minutes to drive down there, and so I thought, oh, this ain't gonna be so bad. So I sent them a letter and said, here's this note that you said on its face that you will promise to pay me dollars on demand. Well, I'm demanding them. Now, I don't know what a dollar is, and I'm willing to bet there's not a person in the room can give me the current statutory definition of the word dollar. They couldn't. So then I sent it down, and I got a phone call one day. And the guy said, I don't understand your letter. And I said, well, it's very simple. It's just a kind of, just a demand for payment. I've got your note, and it says you will pay me dollars, and I don't know what a dollar is, so if you'll send me the statutory definition of it, I'll take whatever the law says. I don't really care what it is. He said, I don't think I can handle this. I think you better talk to an attorney here. And I said, I'll be glad to do that if you give me a phone number. And he said, oh, I'd be doing that. I'll just transfer you up. And so he did. And so pretty quick, this nice lady come on the phone. I assume she's nice, had a nice voice. And she, of course, had never seen the letter, so she was trying to understand what I was saying. And finally, I got it all explained to her, and she finally understood. And just like that, she just screamed and hung up the phone. And I got the bill back in the mail. No letter, no nothing. Well, I wanted to take this a little further, so my friend had a $500 bill. So I said, let's send that in. He said, Byron, I don't want to lose that. I said, I assure you that they'll just send it back, but I want to see what the response is. And of course, the $500 bill had to go back in history more, so it said that, payable in gold. So we sent it in, and we said, no, we want paid. Now we upped the ante, $520. I only had a $20 bill. I wasn't too rich back them days, but I still ain't, but that's okay. Anyway, that time we got a letter saying, well, we used to use gold, sir, but we don't anymore, and we don't have to. We don't have anything to pay with. But if you want something physical for that bill, just take it down to any store, and they'll make it good. I've thought about that a lot. I think I could live pretty high if I could go around and write IOUs and somebody else would always pay for them. I get to buy anything I wanted with them. Everything my heart could desire. I never have to pay one. And they finally ended up saying, they didn't know what to pay me with. So we went down, and so this went a little further, so I went ahead then and I sued him in small claims court. When I filed the claim, the clerk said, well, you can't do this. They're a federal agency. You can't sue them. I said, well, I don't think that's true. I think they're just a private bank. I think I can sue them just like anybody else. But I don't want to argue with you because you may be right and I may be wrong. So why don't I just pay and you send it in? If they send it back and tell you that you're right and I'm wrong, well, then here's my phone number and my address. I'll just come get back, my filing fee back, and that'll be the end of it. She said, that sounds fair. About 3 days later or 4, I got a hearing date and set in court. So we go down to small claims court, and they didn't know what to do. And, of course, the judge, he never read it till we got there. But the attorney showed up for the Federal Reserve Bank, and first thing she wanted to know if I wanted to address a couple other issues. I formed a trust a long time ago based after PCA and Federal Land Bank. Took my wording right out of them, gave me all the same powers I did. Filed with the Secretary of State, thought I could create money. They could. Well, I didn't turn out so good either. But that's a different story. And so anyway, the case ended up in the Federal 11th Circuit Court of Appeals. I think that's the right one. And they dismissed the case because I had filed a relief for which no demand was available. In other words, they have nothing to pay me with. So they don't have to pay. In fact, they actually said when they made that promissory note legal tender, it became the payment of the note that it represented, of the debt it represented. That's a nice racket. Okay, now here's the modern money mechanics. We've heard that about before, where it says on page 4, then the banks discovered they could make loans merely by giving borrowers their promise to pay, banknotes. What they should have said is when banks discovered they could make loans by merely giving their borrowers their promise to pay, they knew they had the keys to the world kingdom, and they did, and they do. And they will always have it until we take that power away from them. Now here's again from the story of banks. Almost all the information I have about the banking system came from the banking system, or from the Bureau of Printing and Engraving and Printing, or the United States Mint. And it says West Side Jake takes in a promise to repay the loan, and creates a demand deposit with money the borrower will be able to spend by writing checks. And this is how it's done. The borrower's promised to pay. Now down here below in the assets liability, if I go in and borrow $1,000, I am required to sign a promissory note, aren't I? That becomes a liability to me and becomes an asset to the bank. Then they take the same exact money and put it in numbers, and that's all we use for money is numbers. If you don't believe me, pull out your billfold, and if anybody's got more than 2 different denomination bills in there, you can prove I'm right. What's the difference between a $1 bill and a $10 bill? That's exactly right. Okay, now if you go to pay back the loan, if I write a check for $1,000 out of my checking account to the bank, that account goes to zero, doesn't it? And if it goes into the bank account and to pay off that loan, the zone goes to zero and I get my promissory note back, don't I? Okay, so that's exactly how they keep their bookkeeping, and that's exactly how the system works. The problem is if they add interest on it, and they don't pay interest on my liability, but I have to pay it on mine, so now, say 10%, now my debt is 10% larger than the money I borrowed. The money that got me into debt will not get me out of debt. So where do I get the money to get out of debt? Well, John Yetter, another letter from the Treasury, said, well, the way you get your money to pay interest, it comes from somebody else's borrowed money. So if you borrow $100, and I get it, and now you want some money to to pay back, you got to capture mine back, plus you got to get 10% from her. Now, if that comes back to me, now I got all that, your principal is destroyed. She now only has $900, and she owes $1,100, doesn't she? Well, how are you going to get out? The only way you can get out of debt is to go right on increasing the debt. And the more you increase the debt, the more you increase the interest. And now I'm going to go through something else. Because the more you increase the interest, the more the prices have to go up. Because interest is the cost of doing business, isn't it? It sure was on my ranch. I guarantee you. It's a cost of business to everybody. And then if the government borrowed the money, and really the government debt is not the problem, it's the private debt. I never heard anybody lose their home or their car or anything else because the government debt was too big. But I heard a lot of them because their private debt got too big. And see, we don't think about these things. And so what they've done then is, and I'm going to show you now the actual steps, how they changed our money from evidence of wealth to evidence of debt with the bills themselves. Now the top bill is a silver certificate. And it was started actually, silver certificates and gold certificates started sometime back in the 1800s when somebody in government decided they should have more gold or silver. So all the gold or silver came in from foreign countries. They had to make a deposit with an outfit there, and then they would issue them silver or gold certificates so they could go down and still spend that money. Then they would remelt that money and turn it into the actual coins, by the United States government. But these both now are certificates of deposit. They clearly claim that that money is there. It was deposited there, and you can come get it if you want it anytime you want. Now we come to the national currency. Now I want you to see here, it says on the top, you probably can't read it. I may have to get this out to do it. But what it says is, this is secured by certificates of indebtedness. And it goes through what it is. And it says the Federal Reserve Bank of Minneapolis, Minnesota will pay to the bearer on $1. Now you clearly see here that this is a promise to pay, and it says Federal Reserve Bank note. It's a promise to pay by that bank. Okay, now we go down to the next one, and it says the same thing, only now the date's a little different. Now we start on here. Now this is the United States, it's Federal Reserve note. It don't have bank note anymore. It still says we'll pay to the bearer on demand. And it says redeemable in gold or lawful money on demand in the United States Treasury of the Federal Reserve. But now you'll notice it doesn't say the bank will pay. It says the United States of America will pay. So you see how that switch was? First it was the debt of the bank. Now all of a sudden it has become a debt of the government, not the bank, but the bank gets all the benefit. This is the one that followed that a few years later. Now, this is after one of the first notes that came out after Roosevelt took all the gold away. Now it says this note is redeemable in lawful money at any Federal Reserve Bank or United States government, and will pay to the bearer $10. Okay, now here's the next one in line. I may have to get this out. I have them all here. This is all written in my books, too. I don't know if I remember the exact writing anyway. It won't make any difference. But it clearly says the exact same thing, but it's 3 lines instead of 4. You see how much smaller that is? But it still has a promise to pay. Now we look at the bill that we have in circulation today. Thank you, sir. I want this and the rest of them. You can just pick it up and take it down there with you. Now you'll see this note only says this note is legal tender for all debts, public and private, $20. Gone is the promise to pay. Now this bill no longer promised to pay. This is not even a legal negotiable instrument. Now how can it be legal tender when it's not even a legal instrument in the first place? Because law clearly says that to be a legal negotiable instrument, you must have a promise to pay written on its face. This whole thing is fraud from day one. Now you talk about you want to pay back the government, the government should pay back its debt. Any case that you go shoot your mother-in-law for the insurance, you don't get to keep it, do you? I mean, that's a total maxim in court, as I understand it. You cannot benefit by your own bad acts. Isn't that true? Then how would we expect them to get the benefit by their own bad acts? It's fraud on its face. It's clear as a bell. Now I want to get into some of the results of what this all really means to you and me personally. Not only does it actually cause inflation, inflation is only caused by two things: greed and interest on the money. Increasing the money causes inflation in the fact that it means it increases the money supply, but you have to increase the money supply because you couldn't have any profit if you didn't. You two each have $10. End of the year, you want each one to have $11. How do you do that unless the money increases? Or unless one of you loses some money to the other one, so now you only got 9 and you got 11. Otherwise, it can't work. So if you don't increase the money supply, you can't even have a commerce. It can't run because you're going to break half the people, the other half gets rich. It does that way anyway now, but that's immaterial. So we'll look and see exactly what's happening, because this is the debt, and they've showed this several times already in this conference. And they also, what they don't show you though, is the effect of the interest. Now this chart came from a speech that David Walker, at that time U.S. Comptroller General of the United States. And he took this, and this is his statement. This is what his figures were in that speech. The total value of America's wealth was $38 trillion. The total debt was $57 trillion. The total unfunded liabilities was 54, and America's money supply was 7.7. The last time I checked, and you can get those figures out of the Federal Reserve Board's website today, and the last I checked, the money supply is 8.8 trillion. So what I did, I had a legislator I got to know pretty well. He was the president of the Senate, and he was a banker in Minnesota. So I took this down to him, and I said, you know, I got a little problem. I'd like to know, maybe I could get you a loan from you. And, of course, it was in the elevator, and there was other people, and everybody was embarrassed. And so I said, well, I really didn't want a loan. I just kind of wanted you to look over my financial statement and tell me what you thought. So I give this to him, and I said, now, here's my financial statement. My total wealth is $38,000. My total debt is $57,000. I got bills coming up that's $54,000, and my money supply is 7.7. Can you borrow me some money so I can cover my bills coming up? He said, hell, man, you're already broke. I said, well, if you change that from thousands to trillions, that's the United States property statement. Obviously, he didn't think they was broke. What's wrong here? Now, this is where you really rubber hits the road. This is what it's all about. You want to know what's happening. Now, this chart here, they said I could punch here. This one here, that was what the interest was. I'll get this right. That's what the total interest bill. No, that's not right. That was the total income. Now I got it. The biggest, longest one is the total income, average income of the American family. Oh, in 1990. The $12,840 was their share of just the interest at 6%. Nothing to do with the debt, just the interest that's owed on that debt at 6%. Okay, in 2005, the average income went up to $43,500. The interest load, average interest load on the debt at just 6%, went up to $30,650. Now in 2016, if you raise that on, the average family income will be about $46,000. I'm not sure it's that high now, but the interest load at 6% will be $47,955. I sent that down to the Federal Reserve Bank of Minneapolis, and they confirmed that those figures look accurate to them. Didn't seem to bother them, but it kind of bothered me. Okay, now, we redid this chart 5 years later in 2005. The income was the same as it was in 40, everything's the same. But by 2016, the debt has grown so much that the interest at 6% will be $5 billion greater than the total consumer income. Now, the debt's gone up steadily since, hasn't it? The interest has went down some. We'll go with that. We drop the interest in half. But how much longer before the interest bill, even at 3%, will be greater than the total consumer income in everybody in America? What's going to happen then? I don't have a clue, but I bet it ain't good. Because, you know, I know from personal experience, from watching around, that everybody and anybody that can't pay their interest loses their playthings. You notice that? They get foreclosed on, don't they? Well, what's going to happen when 100% of, and of course it won't ever be the 100%, but the average family won't be able to do it, period. And this, again, we've heard this. If all bank loans were paid, no one would have a bank deposit, and there would not be a dollar of coin or currency in circulation. This is a staggering thought. We are completely dependent on the commercial banks. Someone has to borrow every dollar we have in circulation. We're absolutely without a permanent monetary system. When we get a complete grasp of the picture of this tragedy of absurdity, our hopeless situation is almost incredible, but there it is. We don't understand it. And of course, the defect is only one thing. Money is created as loans. Now, I don't frankly understand why that we think we can solve the problem by creating institutes that create more debt. This is the only place that I disagree with Ellen Brown on. I think debt is bad. I don't think just interest is bad. I think debt is bad. Now, I'll give you an example. You each have $10 and you owe it to me. Something happens to you and you lose $3 of yours in a fire. Now, isn't the debt greater than the money supply? Of course it is. Because now you only have $12 in the money supply, don't you, or whatever the figure is. You can't possibly pay the debt, all of you. The debt can't be paid anymore, even if you don't add interest on it. If you lose any of that money in any way, gets burned up in a house fire or anything, the debt is still greater than the money supply. Well, when you have a debt, somebody can always foreclose on that debt if they want to, don't they? Always have in my lifetime, and it's just history have. And again, this is where we've come to. A study of the World Institute for Development Economics Research at the United States University reported that the richest 1% of the population owned 40% of the global assets in the year 2000, and that's the richest 10% of the population accounted for 85% of the world's total wealth. We've heard that over and over again, and the three richest people have more assets than the gross domestic product of 48 at least developed countries alone together. And see, this is what this system does. It always takes from everybody and feeds the top. And I guarantee you can never get around this system. You have a monster out there that every time you start doing something that he sees a threat, he'll shut you down. I've seen it over and over again. On this bill I've worked on, we'll get in that in just a minute too. And of course, you've heard this statement before. It was just given in a speech not too long ago. There's no sense. So now we get to the solution. The solution is so simple, it's unbelievable. The solution to all these problems is simply put money back where it represents wealth. There's several ways you can do it, but you can't do it by increasing anything as more debt. Our problem is too much debt already. And I guarantee you cannot borrow yourself out of debt no matter what you do or how you try. Now, you may shift some money around, and I think, frankly, your banking ideas is good in the fact that it will begin to shift some of the money away, but it will not solve the problem. And that's the difference. Whether we want to shift around and get away from the problem and hide from the problem, or whether we want to address the problem head on and say we can't live this anymore, we're not going to live this way anymore, we are going to change it. And if we don't have that attitude, you're going to get exactly what you deserve, nothing, because you won't do anything. Forgive me, I get emotional too. And if you think I'm really bad, wait till I get wound up. But that is the whole thing. You have to address the actual problem. The problem is they switched our money, which is a good thing, and money was developed for only one reason, to make transfer of goods simpler. And it does an excellent job of that. And it don't make any difference what it is. Money, in fact, many times you've said in this conference that you need an accounting system to keep track of the credits. I hate that word, because when I look it up in the dictionary, it means what I owe and maybe I can pay later. I don't want to owe. I want to be a man that owns. You know there's a difference between them three-letter words? A real difference. And I don't want to be an ower. And I'm not a great Bible believer, don't get me wrong, but I think there's some things in there that make sense. My personal life has taught me that the lender is always servant to the borrower. The borrower is always servant to the lender. By God, if he wants his money, he can come take you. And they don't mind sending out an army to get it either. I'll give you another story about that too, but it won't. So see, we got to address the problem. The problem is you have to get money that represents the wealth. And the way I personally chose to do it, only because I happen to live a half an hour away from my capital, and I can go do it. So I spent a lot of time thinking about how that you would create wealth money. And I've worked on this one bill for 17 years down to the legislature. And I get them convinced they like it, and then they go talk to their friendly banker who don't like it, and he makes it clear, if you guys keep supporting that, I'm going to take away all your campaign money, and all of a sudden they don't like me anymore. Now, I ain't have no way to give them campaign money. The bank had seen that problem one time, took that away too. But that's neither here nor there. Most of us don't have the funds to fund them like a man that can create his own money. Now, just tell me, I have a banker friend that I've met, a retired guy, that showed me the actual bookkeeping, how banks could create their own money to buy their own products. And he showed me the actual bookkeeping just like I showed you how they made the loans. Now, let me ask you a question. If you could create all your own money, and you got to create all the money that all the rest of us use and pay interest on, how could you not rule the world after a while? It would be impossible for you not to rule the world after a while. Well, how can you stop them from ruling the world if you let them keep that power? It ain't going to happen. And I've heard it here several times. You guys have worked hard to get a public bank in a state or someplace. And you liked the idea. And then all of a sudden the banking system said, well, I don't think we like that idea. In fact, Rockefeller made a really good statement once. He says, the biggest sin is competition. That's not a direct quote. But think about it. They really believe that. They don't want any competition. They like ruling us. And they don't have any conscience either. I can prove that in many ways. So you have no choice. So I'll tell you what I did. And it didn't work, of course, because of the same old problem. I didn't have enough support from people that helped me. But on my own, almost 100% on my own, I got 3 different hearings on this bill. And it's a simple bill. State legislators have the power to create money. State banks do. And I have a chart from the Department of Commerce that tells me exactly how state banks create money. State banks are controlled by state law. It has nothing to do with federal law or Federal Reserve banks. I have a personal email from the FDIC that says any law passed by the state is binding on them and their audits. So I said, well, you guys just passed a law that requires state banks to create a certain amount of money debt-free to rebuild our infrastructure in Minnesota. Oh, the legislators loved it until they talked to their bankers. And the bankers tell me it won't work, and I've asked why, and they say because it won't. And that's the end of that conversation. So there's many ways that you could do it, and I think you could do it several ways that's been discussed here. But you've got to start bringing in the concept, you've got to create debt-free money, not debt money. You just can't create more debt because we've already got too much debt. You add more debt on the other, more debt, and what do you got? Even if you don't have interest on it, you're still going to have the debt increase. And that means all the other money out there that's drawing interest now is going to keep growing it. And I could borrow money without the interest to pay off a debt without that with interest. I'd get rid of the interest, but I wouldn't get out of debt, would I? It's that simple. This is not a complex thing here. This is simple. Just simple math. If it wasn't, I wouldn't have understood it. But this is things that you learn from operating the ranch and living this stuff. I didn't spend all my life in the classroom studying it. In fact, the first thing I learned that I got into this, if you want to understand about money, the last person you ask is an economist and a banker. They don't have a clue, and they don't want to have a clue. Because they don't care. They're getting paid very well to like this system. So it don't make any difference what you do, whether you do it through a state bank, which I'm not sure that's a bad idea, but you better make sure if they have the power to create money, if I can create it as a loan, I can create it as an asset too, can't I? And what we did in this bill, it was very simple. Well, the last time we wrote it up so that nobody in the state legislature or in government except at the local level could decide what projects needed to be built. And they would actually create the money, the banks would, to fund the transportation needs in that community. Whether it was roads, mass transit. In Minnesota, there's a guy who developed a personalized mass transit. Little cars that run around hold about 3 people. That can run, on the average, run 40 miles an hour. It's really neat, but nobody wants to fund it. But you could do that, and that local community would have to decide by petition or meetings what exactly road they wanted to rebuild or if they wanted the streets rebuilt. And I've done a little walking around since I've been here, and I see a lot of streets that need to be rebuilt around here pretty bad. And then they would simply go in and they would furnish the money, create the money based on the production of they was doing. Now, the United States Constitution makes it very clear. Article 1, Section 10 says Congress should coin the money. And like they said earlier, that didn't mean just coin metal. That meant just create money. And then it also says Congress is to provide for post offices, post roads. That's where I got this idea from. So if you actually had them create the money and spend it into circulation, produce the roads, which is the one thing you must have if you're going to have any commerce at all. You and I can do business. I could trade you my suit for your shirt or whatever, and we could do business. But if we can't even get to each other, I guarantee you we cannot do business. You cannot haul freight unless you have a transportation system. So if you rebuild and upgrade the transportation system and keep it in an A1 shape, that would provide the money we need for the system to grow. And it wouldn't grow near as fast because there'd be one thing that would always limit it. If there wasn't the people to do the work and there wasn't the materials to work with and you didn't know how to build a road, you'd have to stop, wouldn't you? And also you have some other things because you could stop them from taking a lot of these land just to build roads that you don't need. In fact, most people I know wouldn't voluntarily give up their land for a road they didn't need. They get angry about taking their property. Most of them I know, they kind of like to keep it. So see, this is such a simple concept. It's so logical. You create the money, you spend it in, and tell me if I'm wrong. There's only 3 ways to move money. I can gift it, I can spend it, or I can lend it. Right? Now, the guy said you could also take it by stealing it, but I think that's just a forced gift. I steal your suit, I just get it for free, don't I? And see, these are the things we need to think about. And if we apply those principles, and each one of them has an absolute separate set of consequences, I got to shut up. We need to get it in where it works on the principles that all money represents production done. And it's a payment and a final payment for it. And I thank you for your time.
A couple questions here. You have any questions right here? Okay. And one more, maybe?
I hope I'm remembering the title correctly, but what do you think of Dennis Kucinich's NEED Act?
Well, I have several problems with it. And problems that's already been addressed. For one thing, I don't think you can have the same people run it that's been doing the other system so long. If you're going to have a new system, you're going to have people want to think in that new system, not in the old system. I don't think we need basically a 4th branch of government. I think the Treasury could do it quite easily, I mean the Congress. Now see, there's things about that too, because actually the Treasury only does what the Congress tells them to do. You know, and in fact there's laws that says that they have to create all the coinage we need, but they do if they just talk about the nickels and dimes, but that don't mean the big amount of money because they never touch that. But see, there's a very small, I mean, you don't need anything for the Congress to pass a law. And it could be a very simple law. When some pulled up, what's a local county here? Anybody know? Okay, when this county comes in and says, man, we just got to fix these old roads here. And here we got contracts, we got the bids, what it's going to take. Now we need you to send us out that much money so we can do it. In lieu of taxation and in lieu of debt. So they just print up the money and ship it out on a car. Or they could just write it in a bookkeeping entry and put it through the banks. I don't have a problem with banking helping us move. In fact, they are actually the debit and credit system you guys are all talking about if you take the power to create money away from them. That's where the problem is. No man should be able to create money for his own personal profit. If you don't think he don't have a gain on everybody else, you don't understand anything about money. Man, if I could create my own money and you guys couldn't, I'd have to be the biggest businessman in the country. Okay, go ahead. There's several other things, but that's basically it. Any place that you say. Go ahead.
Yeah, just very quickly. There is such a thing as debt-free money, just so we make it clear.
You show me where and how
I'll
to
show you
get
right
it.
now. This is a United States note. It's not a Federal Reserve note.
I guarantee you that is not debt-free.
It's debt-free. It's from the
No,
Treasury.
it's not.
It's
And
not
I
from
can
the
prove it
Federal
to you.
Reserve. It's got a red seal.
I don't care. I know what you're talking about, and what does it say on it? Read it to me.
This note is legal tender.
You stop. You already proved my point. A note can only be one or two things. It's, hi, how are you today? Or, you owe me. So what that, well, come on, that's the legal definitions of the word.
Pay all debts, private and public.
That's right. But it's a debt to the government. Now, how that actually works.
It's not debt to a private bank. It's not.
No, but it's a debt to the government. I don't want to be in debt to the government either. Now, yes, under the way they used it, they needed the war supplies, so they printed them. Yeah. They went out and took your stuff. Well, they didn't want to call it stealing, so they paid you. Oh, but it was a debt to them, not to you. Now, you can have money, debt-free money, several ways. It can be because you owe or because I owe. Okay, now they still owed. Now, the way I could pay the debt to them was paying my taxes. Well, if I paid the taxes, the money went out of circulation, and now we had no money again.
But you don't need taxes if you have the government.
But that's it, because you had to pay them, and they said that's the reason they issued them, because they had the taxing power. But they did not have the taxes due. So they couldn't come out and say, you got to give me this money I want right now for taxes because it's not due. So what we'll do is give you our note, a promise to pay you later, but we won't pay you. You can just come back and give it to us to pay on them taxes we're going to tax you. And that's how it worked. That's the principles how it worked. I guarantee you, I've studied this probably more than you can even imagine the hours I put into this stuff. This has not been just something I did in my spare time. I have lived this. I've ate it. I've slept it. I've dreamed it. I've been in jail 4 times fighting this cockeyed stuff. How many of you guys been in jail for what you're doing? Did you make enough stink to get in jail? Oh, I see we got some real men here. And a woman, too. Now, this is what it's all about. And yes, you're right. That would be better than what we got, but it's not debt-free money. Read my book. I'll explain all the ways you can have debt money. You can have it 4 different ways. You can have it you and I both owe, like it is right now. The banks owe us and we owe them, except they had the interest. We can't pay it. We can have it because just the government owes us, which that is, or we can have it just because we owe them. I'm not interested in who owes who. I'm interested in who gets to own what, especially after he works and produces it.
Yeah, but you can't produce your own money. Everybody produces their own money.
I didn't say you could, but there's 2 entities that does right now create money and nobody objects to it. The government, everybody thinks they create money. Why didn't they just spend that in?
We in this room know better than that.
But they created that.
The government created this.
Okay, why didn't they create it as a bill rather than...
They discontinued these in 1970.
Yes, but why didn't they do it? Why didn't they take the word off note? You take the word off of that note and I'm with you.
This is 1928. They did take it out in later series.
Not the word note, they didn't.
Not note, but they took out the...
All Kennedy did was take off the promise to pay.
Yes.
And that wasn't even on the original notes, wasn't even the promise to pay on them. Yeah. I have them at home too. Okay. I have every note I've showed you and most of the rest of them that I have here. I've looked until I've actually found the actual note to prove what I was saying. Yeah. And I agree with you, that's a lot better than what we're doing. And yes, that's one of the things I think we should do. The government should create the money, in my opinion, because that's what the Constitution says. Right. But they shouldn't have any tie to any debt to them or anybody else. They should create the money and spend it in, just like that, only take off the word note. This is United States currency, let's say that.
But they wouldn't need to have tax at all. I mean,
they wouldn't need any tax, that's right.
Exactly.
And you would eliminate taxes.
Produce enough to keep the economy going and keep up with population.
Absolutely. They wouldn't hardly need any tax.
Yeah.
Now, how much better off your life if you got rid of all your interest and all your taxes? Or even 50% of your taxes.
Just produce.
I asked my dentist a while back how much less he could charge if he didn't have to pay any interest in about half his taxes. He said, oh, God, I could charge you a lot less. And see, that's the difference. But we don't want the government to be in debt either. Nobody should be in debt. Money should represent only one thing, final payment for production done. That's the true definition of money. It doesn't make any difference what the money is. That bill, numbers, anything works if the principles, if it's based on wealth and production and can only go in when that wealth and production is done. Then you have true money. Money that benefits everybody in society that's willing to work.
Money should exist to meet the productive capacity of the nation.
Absolutely. And see, I don't think anybody should decide that except the people who do actual work. And if you do it in the transportation system, you take all that speculation of how much money you need. Because people will demand the roads they need. And then, if you didn't need so much money, and you didn't, as Margaret Kennedy, they already said here today, and I think she's right, 40% of everything is just the cost of interest. And I think at least 30% is the cost of taxes. I don't leave a whole lot much, so anything left. And you see this all the time. Because once you drive up the cost of interest, once your interest comes due and that cost goes, the first thing you have to do is either take less profit or cut your expenses someplace else. Now that starts driving a big spread constantly between labor and raw resources and finished product. And that's what we see. And that's what they call price inflation. They always say, well, because the government prints too much money. But everybody I know is short of money. How many people here really believe they know somebody who honestly believes they have too much money? I don't even think Warren Buffett believes that. If he would quit doing all this business and get more. I know Bill Gates don't, because he don't lower the price of his computers any. See, this is the whole thing that you've got to change. It's like one of the late congressmen said to me the other day, actually a senator in Minnesota. She thought a while and scratched her head. She says, this takes a whole paradigm shift in thinking, doesn't it? And that's what it really is. You've got to get out of this thinking old that you need more credit. You need real money. Go ahead.
Byron, we have to stop.
He says I got to shut up. Come talk. Yeah. It's what? Absolutely not. Because it's based on production. Because the production has to increase the same amount the money does.
Who's going next?
That's right. And you have to have increase in front of you. You couldn't have either savings or profit. Well, not if you have profit. Population don't have to grow for you to have profit. I don't think so. And I think if in time I could prove you that. For first place, how much money is too much money? And if you had a big enough salary, you could put away 50% of it for savings, which you'd have to have if you didn't get interest. You'd have to have it to retire. How much is too much money?
Thank you, Byron.
Created by extension of credit and a book entry. Where does the money come from to pay the interest on the money we just borrowed? And he writes back and says, the money for paying interest on borrowed money comes from the same source the other money comes from. Now, I guarantee you, I'm not the world's greatest genius, but I'm smart enough to know you can't borrow your way out of debt. And I learned, I didn't do it personally, but I was with a lot of young people when I was young that tried to drink themselves sober, and that didn't work either. Forgive me, I really don't like to do these sweep charts. I'm better at just getting up here and tell you my life story. I had a guy tell me you're a poor speaker, but you're a really great storyteller. And that's kind of what I am. I've lived this. This has been my life. I haven't thought about anything except a few minor things about, for the last 30 years, about what is money, how does it affect our lives, where does it come from, and what do we do about it? That's all I've done. That's committed my almost life to that. Didn't get much, but I got a lot. I learned a lot. Okay, I want to go through some of the things because this is kind of interesting. Because first, I want to go to this chart just a second. Because I want you to understand, and maybe not this right, but money is power. Now, it's not money in itself that's power, but it gives people power. It gives power to do a lot of things with. And money also works on certain principles. I said, son, you just made yourself a deal. And I turned around and I went in the house and I started studying about money. And I admit, I didn't know anything about it. Only thing I cared about it, I'd like to have more of it. Any of you ever been in that situation? And so that's what started, and we did some of this stuff, and we studied. And then one day I was sitting there after thinking about this stuff, and I said, what would happen if I wrote to the Treasury and asked them how the money system worked? And my wife said, well, I don't know. But she said, I never learned to type till I was 49, which was much later than this. She said, well, I'll sit down and type a letter for you. So we did. And I want to share that letter. I don't have it up here like I do some other charts. But I want to share the letter with you. It was written to the United States Treasury. I didn't know who to write it to. It was a 13-page, all it was 13 questions. I sent it to the Treasury, Department of Treasury. And a fellow by the name of Russell Monk, the General Counsel of the United States Treasury, wrote and answered my question, an 8-page letter. But the thing I want to deal with at all was the first question I was really most concerned with: how is money created? And he wrote back and said the actual creation of money always involves the extension of credit from private commercial banks. In other words, you got to borrow it. Well, the first thing that popped in my mind, I said, well, if that's true, where do I get the money to pay the interest? So I wrote him another letter and asked him. And it says here, and this is, I'm not going to get the whole letter, but this point here is all I wanted to really get about. Another point I need you to clarify: if money is only, and unlike most people up here that said they didn't have a solution, didn't know how to implement things, I think I do. Also, I think we have a great problem, and most of us will not address the real problem. The real problem is our money. And I mean that indifferent than everybody else says, because one guy said he can't understand why people don't want to think about money. The reason is because everybody thinks they know everything about money. I'm serious. I have traveled from California to New York City and from Canada clear down to Costa Rica giving speeches. That's all I used to do for a while. And everybody I knew thought they knew a lot about money. Now, I knew I didn't know anything about money when I started, so I did what I thought was the logical thing. I wrote a letter to the Treasury and asked them how the money worked. And that's what I want to show you. I didn't do a lot of research. I did that too. Actually, it was a kind of a long, drawn-out kind of a process, because, and I always get emotional at this point, and forgive me, because it's a big deal in my life. And it always affects me when I get a little tired. And I get tired when I'm doing this kind of stuff and staying up all night and sleeping in strange beds. But I began really interested in this when I began to wonder how in the world we got so far in debt when everybody I knew worked for a profit. And the IRS said we got some because they wanted share of it. But yet the debt got bigger and bigger and bigger. And I was personally, I thought, fairly successful. I started out at 22 and married that really nice looking.
While our next presenter gets his microphone on, I'm going to introduce him. Byron Dale is an author and lecturer on the monetary system and has been qualified in several courts as a monetary expert in North Dakota, Minnesota, Illinois, and Missouri. He is the author of the Minnesota Transportation Act, MTA, which would mandate Minnesota's Transportation Department and state-chartered banks to enter into an agreement providing that the banks would advance funds for legislatively approved transportation projects in the same way that banks make commercial loans, simply by monetizing the projects themselves. And without going into the details of his presentations, I will just introduce to you Byron Dale.
Thank you, Bob. First thing I want to know, can everybody hear me? Okay, now the second thing I want to know, if you'll answer some questions if I ask you. Okay, the first thing I really want to do, though, is tonight is to thank Ellen Brown, or I wouldn't be here, and Bill Still. Bill Still drove all the way from Chicago to Minneapolis in an ice and snowstorm to interview me for his film. And I really appreciate that. He actually risked his life to do it. He stayed overnight, and we had a couple of great visits, and he took several shots of me. And of course, you see me occasionally on that film. Dark-haired girl back there, when she was about 19, as I recall, which is almost 50 years ago. And we started out with 640 acres of land I got from my dad for a contract for deed, and we went into the ranching business. 18 years later, we had a 5,000-acre ranch worth $1 million on paper. Now, I had learned one thing really well, was how to get into debt. I have not been out of debt at least $100,000 since I was 23. But I was having a hard time figuring out how to get out of debt. And, you know, it became very obvious to me, like so many say, there's got to be something wrong here. So one day I went to a management meeting in Denver, and we run into a really good speaker, and he was telling us all about how to keep our books and manage our books and know what was good expenses and bad expenses and all this stuff. And so my wife and I figured out, we decided how to do all that. We did. I didn't like the results. But then I got real interested in this. I had a son just graduated from high school. And he was out in the garage one day, out in the shop, and we were talking. I was asking him all kinds of questions about this stuff. Because, I mean, after all, I thought he was a pretty smart kid, like most of our parents do. And pretty quick he looked at me and he said, Dad, I don't have a clue what you're talking about. I don't even think I'm interested, but I can see you really are. So I'll tell you what, I'll make a deal with you. If you promise to never ask me any more questions about this, I will run this ranch for 3 months. You have 3 months to figure out what the heck you're worried about or thinking about, but you got to leave me alone. And I looked at him and I said, are you serious? And he said, well, of course.